All right, good afternoon, everyone. This is Margaret Myers with Bridge. Thanks, everyone, for hopping on and joining for today's partner webinar. We appreciate everyone's time, and we're excited to be joined today by Jansen Evans, Head of Sales for AdvisorPeak. So it is 4 o'clock Eastern. We'll go ahead and kick this thing off. So AdvisorPeak, for those of you that don't know, is a powerful and intuitive trading and rebalancing solution. So here at Bridge, we are proud to have them as one of our integration partners and have invited them to join today's session. And Jansen is going to be spending today's session showing you how AdvisorPeak can be combined with Bridge to create a comprehensive portfolio management experience. On an administrative note, we will be doing a question and answer session after Jansen's demo. So feel free to submit any questions through the Q&A button down at the bottom of your Zoom. Feel free to submit them throughout the webinar, and then Jansen and I will go ahead and cover those questions at the end. So with that, thank you to Jansen for joining today, and I'll turn it over to you.
Yeah, of course. Thank you so much, Margaret. And I appreciate everybody for being willing to kind of take some time out of their day today. We'll keep it short and sweet. I know that you guys are busy. You have a lot going on. So want to just kind of hit the high points. And if you guys have any questions or want to dive into anything any deeper, I'll have kind of our contact info towards the end of the webinar, and you can contact us for, to get into more detail. So want to just kind of jump right into it. There's a lot that goes into kind of trading and rebalancing software. There are several of us out there that kind of do this. Some do it better than others, and some, really lack in some of the major functionality that really a trading and rebalancing or a trade order management system should have. So one of the things, and one of the reasons why we're on this really in the first place, is Bridge obviously being a partner and an integration partner of ours. It's a special kind of integration, really, from the aspect of really everybody in this industry will tell you that their system integrates with everybody else. But those integrations can vary quite a bit. It's not very equal in saying that, that you have an integration. It's what type of an integration. So there's kind of three levels to that. You've got kind of a data integration, which is generally file based. You've got API integrations, which is much better. And then you have even automated API integrations, or FTP processes, where you can get automatically, and that's what we have set up with Bridge. It's an automatic data feed, keeping both systems in sync at the same time, which is great. There's not many systems out there that are really doing that. Even some of the all-in-ones that exist out there don't have them within their own products. So anyways, really appreciate everybody kind of jumping in here. We're going to talk kind of about some features. We're going to go through kind of the management side of things, and then we'll kind of continue through it. The real whole goal of using a rebalancing software, as many of you who are doing trading now, is really to kind of, for efficiencies, really to kind of make that process as simple and as painless as possible, and really just kind of wrap it up, from a support standpoint, really being able to help you when needed. We've got an incredible support staff that's here to be able to answer any questions you have and walk you through the entire trading and rebalancing process. So today on the webinar, what I want to do is I want to focus on a couple specific scenarios, and we're going to kind of cover these individually, but just to give you an idea. So the first one we're going to kind of walk through is what you would consider as kind of a cash only client, or somebody like a George Jetson. He's got cash. You guys are looking to do some dollar cost averaging in them, and you kind of know some things about them. And we're going to have our Phil Mickelson client, who's a little bit more seasoned in his investment life. He's already got some investable assets. We're going to play around with some of the companies that sponsor him and some of the stocks that he'll own in his account, and how to kind of handle some of those types of things. And then lastly, householding. So household-based rebalancing is something that not every system obviously has the capability to do. Most custodial trading software you get included on that platform will not generally have household rebalancing. So we will go through the Manning household. Any football fans out there will get a kick out of the Manning household here. Archie and his kids and his wife, all included in a single household. So that's where we're going to kind of jump. I'm going to jump over here to our system. So If we jump into kind of our portfolio screen here, I've got these 3 different scenarios kind of lined up through a custom tag that I have set up. So again, we've got George Jetson, we've got Phil, and we've got the Manning household. So the first place we're going to start is really in George Jetson. He, again, came in with 100% cash. We're looking to basically invest that cash on a regular basis. And so there's a couple things you can do in that scenario. And we've got some dollar cost averaging kind of feature or some capabilities there that you can come in here and use. So I've already set up this dollar cost averaging scenario, but you can see here that maybe, George Jetson came on board around the middle of August. We were looking to invest a quick 50,000 to our model, and then really every beginning of every month after that, invest another 100 until he was fully invested. So the idea behind the dollar cost averaging is that the system won't necessarily automate the rebalancing of it, but it will automatically release the cash as you have it set up for basically for rebalancing for trading. So what a lot of our advisors will do that are using this, they'll come in here, they'll set up kind of their script and kind of the process and schedule that they want to follow, and then they'll just rebalance these clients or their DCA clients on a regular basis. So they'll go in and identify those either on a monthly, quarterly, or however kind of your schedule is basis, and rebalance them. And so I could jump back here. I could quickly find George if I wanted to do some trading on him. So if I came in and put in for George here, I could grab his account. I could either run through basically an entire just general rebalance, or what we've seen in most cases is you just invest cash. So you'll generally invest cash, invest cash, invest cash, and then kind of do full-blown rebalances once totally invested. And that could be very that could change, I guess, is probably the best way to put it, depending on market movement and the different things that have happened there. If you do want to do some rebalancing or bring some things back into target. But in most cases, once you're releasing that cash, you're going to be pretty short on all of your positions. You're just going to add to them. So you could run through an invest cash mode and do that. Our second example here would be Phil Mickelson. So I'm going to come in here. We're going to grab Phil. Now, Phil's a different kind of a client because he's already basically got an invested account. Maybe he's been a client for a while. Maybe he's a new client that's coming over from another advisor and has been kind of invested over the last X amount of years. Now, he's going to come in with what he already owns. Obviously, paper him over, and he's going to own all the securities that you have in here. So a couple different things you can do. So I've got a couple scenarios like Amgen and Callaway. Obviously, Phil's sponsored by them. Whether or not he owns stock in those companies or can is up to debate. But you'll see here he's got some shares in those accounts, and it's fairly significant in comparison to the rest of his portfolio. So you have a couple different options in kind of dealing with what you would probably consider like legacy assets, do not sell positions, even low cost basis positions, or just securities that maybe they work for a company and you need to exclude. So you've got two options. You can either mark a security with a do not sell restriction, or you can just exclude it altogether. The real big difference between those two is if you exclude it, it does exactly what it sounds like it's going to do. It excludes it and separates it from the rebalancing process, and it allows the model to basically be applied to the rest of the account. If I mark something with a do not sell, obviously that restriction will hold. It won't sell that security, but it does allow you to set up potential equivalency to something in your model. So the equivalencies can work a couple different ways. You can make them security to security specific, like making Pepsi equivalent to Coke, or you can make them position to class equivalent, meaning I can make Pepsi equivalent to my large cap holdings. And so the nice part about it is when you're able to do it towards the class, it doesn't matter what's held in that class. If your model changes in 6 months or in 6 years, Pepsi's still going to be equivalent to whatever position you're recommending now. So that's nice from that standpoint, and you can control those. You can also set them globally if you want to make, for example, Callaway as a do not sell restriction globally. This is obviously specific to Phil, but you could come in here and do that. So those are kind of two of the biggest scenarios we see play out from just a client restriction standpoint, because obviously, you know, clients will come in, they're already been invested, or clients will come in and they need to invest some cash. The other kind of cash setting that we see used quite a bit is in kind of the opposite, not necessarily investing available cash, but making sure cash is available. So you do have the ability to set up either a minimum cash, or in our system, what we call as a cash distribution. These could be one-time distributions. They could be recurring monthly distributions. You have the option to set into the system how many months of this you may want to hang on to. And so you can see at the end of the day, this $2,500 a month, we're really asking the system to hang on to about $7,500 of what you would consider as extra cash in the system, so that it's making sure that that is always available when they need to pull it out. So those are the big ones. Those are obviously, there's more, there's quite a bit more when it comes to settings and individual client scenarios, but those are kind of the big ones. So if you have any questions on those, feel free to type them in the Q&A section and we can kind of dive in at the end of the call. But once things are kind of set up here, you really get into kind of the rebalancing components of all of this. So let's open up the Manning household, because this one is a little bit unique. We've got obviously Archie, his wife Olivia, and their football kids, right? So you've got Eli Manning, you've got Peyton Manning, and the little lesser known Cooper Manning. But you can see here we've got several different account types within this household. We also are even split across a couple different custodians. Now, that's not always going to be the case. Most of the time your accounts are going to be at a single custodian, but I did want to highlight that we are a multi-custodian platform. You can have assets really all over the place if you need to. Now, in the event of we're going to go ahead and rebalance this, everything's going to come back to really your model structure and your asset allocation. So within AdvisorPeak, you have a couple different options as far as how you want to have your clients invested. So we've got different styles of models. We've got security models, which you would consider are like position-based models, really. So as we come in here, we can see I've got Disney and Kohl's and ETF and a mutual fund in here, and I've got specific target percentages associated to each one of those positions. Now, this is probably the most basic version of a model we have in the system, but it's probably the most widely used just because of the simplicity and kind of directness of kind of its capabilities here. Now, from a householding capability within your model, you do have the ability to rank securities to be owned in different account types. Now, this is a huge thing, from just being able to tell the system in a householding scenario where certain securities really need to land, and you can give preference to that. We just rolled out basically an integration with a partner of ours by the name of LifeYield. Some of you may already know who LifeYield is, but we were selected by LifeYield as basically one of the best household rebalancing systems on the market, and they let us build an integration with them right out of the gate. So what it does, you can click this button, and if you had built out your model here and didn't really know exactly where you want to locate things exactly, you can click that button and it'll actually update those rankings. Now, where that's going to come into play the biggest is really in our next iteration of that integration, is we're going to start to be able to generate a tax alpha savings report. So what that's going to allow you to do as an advisor is to say, look, to your end client, because of the technology and the things that we're doing and the way that we're modeling and the way that we're handling all of your accounts, I'm able to be very tax efficient in the way that we are investing your money. And by doing that, here's basically a tax alpha savings report. Here is your tax-free, basically ROI, or basically yield on your account. And that's going to be a report you could share with them, a PDF report you can share with them. It'll show why and how they kind of came about that number. So there's several things you can do with that, but that is a game changer for many of you who are household rebalancing. So again, this is our basic security model or position-based model. On top of this model, we also have what we call our class models. Now, class models are just a little bit different. We generally would call these kind of asset allocation models, because I've got some examples of some classes over here, and instead of the individual positions having a target, the class does. So if I'm looking at domestic large cap growth, I've got an 11% target to domestic large cap growth. If I expand basically that asset class, it'll show me the 3 preferred securities, even a preferred target percentage that I would want to hold there. Now, this is where a lot of things start to kind of spider off and spider web off from most systems. These class models are very flexible because it can take into consideration what we talked about earlier, where we've got somebody with a legacy asset or low cost basis position or something of that manner. They're invested in something different. And so it can say, okay, right out of the gate, what it does is it does an analysis to say, where are we now? Where are we currently invested? And what does that look like from an asset allocation standpoint? How are we filling up each one of these little, I would call them kind of buckets of these asset classes? Are we over or under where we should be? And if we're off, what changes can we make? So again, there's a million different scenarios that kind of play out there. A lot of times what happens is you'll have a client who owns, like, let's say they own SPY within domestic large cap, but that's not necessarily what you're suggesting. And so as long as the class or basically the class target is being met, it's not going to try to make huge changes just because the one security you have is off from maybe your preferred. Now, that doesn't mean you can't force the issue. You could say, look, I don't want to own SPY, and I do want to own what I have in my model. You can force the issue around that to basically sell securities not in a model. But in most cases, this does a really good job because especially from, bringing over new accounts or bringing in a household of accounts, they're going to have a lot of positions all over the place. And so it's very flexible in making sure that you're being cognizant really from kind of that risk profile standpoint of where things stand from an asset class perspective. Now, these will mimic what you have set up in Bridge. And so you have that ability really to have the system stay in sync from an asset to class relationship, which is really nice. So if you were to change it in Bridge, it would basically carry over. The last kind of model we have in the system is really what we call our sleeve models, or what a lot of people call our models of models. That's what we call them. Some people call them blended models. But you have that ability in here, if I wanted to click into one of these, if I wanted to build some core sleeves or some core models and then build a percentage around them, I could do that. So this is a very simple scenario where I've got equity and fixed. This could very well be much more complicated if I had maybe an international sleeve or an alternative sleeve or something like that, and then the percentages could kind of play across those. So you have the ability to control those for specific clients, and really the calculation behind the scenes is more or less doing a percentage allocation. So a 10% exposure to Apple in your equity portion with a 60% weighting to that sleeve, you're going to have a 6% in Apple, right? It's what is 60% of 10%, and give that to you. So fairly straightforward, kind of is a play or kind of really just an add-on to those different types of models we have, both security or position based, and then the asset allocation models. So you can definitely take advantage of those. And so again, once you've got most of that set up, again, we've talked mostly about setup in specific scenarios, but the rebalancing side of it is really where all the fun stuff starts to happen. So this portfolio screen, this dashboard that you have here, this is going to give you the ability to come in and basically query your client base on maybe what's been going on, or some drift, or where's cash, or when was the last time we traded these clients. And so you have total control over what it is you want to see on this screen, and then you have control over how you may want to filter around that. So a couple scenarios we see used pretty heavily are going to be, hey, when we rebalanced 2 months ago, did everybody get rebalanced? Did we trade everybody? So I can come back and say, hey, on July 1, who didn't get traded? Now they got some blanks in here, and then you've got some guys who haven't been traded since like the beginning or end of last year. Now that might be okay because they've been reviewed since then, basically yesterday. But their drift also isn't that far out of line from their model. So you can see some of these are pretty big numbers. Just demo database wise, this continues to drift as it's just basically static data, but I can come in here and I can see all that information. So that's a really easy one. And from a compliance standpoint, knowing the last time somebody's been traded and or reviewed is good to know. So another big scenario we see is drift, being able to filter down by drift. You can absolutely do that. And another one is cash. So you can use these filters kind of with each other. They can help each other. So I've got a tag in here, as you can kind of see, that's called systematic withdrawal. Yours could be called RMD, it could be cash need. You get to name these tags. But if I come in and say, I want to see everybody who's got a systematic withdrawal, and I want to come in here and analyze who might be high or short on cash, in most cases you're looking for short, you can sort by this sweep cash difference column. You can see that information and you can analyze, okay, they have 11,000 in cash. They should have 15. They're probably okay for another month's worth of distribution. I don't need to make changes here. Or if this is too far short and you need to raise that cash, you could just highlight that account or the set of accounts and raise cash. So a couple different ways you can kind of go about that. But again, that's kind of using the columns of information to your kind of to your benefit. So I'm going to go in here. We're going to actually rebalance everybody. So I'm going to grab everybody we have here. We'll run them through a full rebalance and then kind of walk through that process. So once you've gone through and told the system, hey, we want to rebalance these clients, it puts you in a review stage. The review stage will show you your recommended buys, your recommended sells, and any taxable implications to the trades that are happening. So you'll see a lot of these negative amounts, some positive, but you can come in here, for example, if we want to jump into the most complicated scenario, this Manning household, it will show you all of this information and what's being recommended and why. So I have the ability to open this up. I can even open up their alerts. I can see they have a couple security equivalencies, a long-term gain warning, which I may want to, jump into and look and see where that's happening, and some do not sell restrictions. I can also see any notes that the client has potentially given me and that I may want to keep track of. So I can see all that information and I can go through kind of the details of it all. And then as I get down here to the bottom, for any of you that are probably doing this manually or through a custodian or on another platform, this is kind of the guts of it all. Where am I? Where should I be? Am I within tolerance or not? If I'm not in tolerance, what trades are we making to get me back to target? You have that ability, again, if you're looking to identify where you might have some taxable implications happening, you can drill into every single one of these classes, look at every position, the account that it's owned in, and even see cost basis over here. So pretty quickly you can identify where that long-term gain is happening. If I wanted to manage that or update that, I could come in here and edit this trade. So maybe I don't want to sell 49,000, maybe I want to sell 100,000, which is kind of the opposite you do in this scenario. But I wanted to show you guys, if you do that, you do run that possibility of seeing the change there. So if I come in here and I modify that, I do get to see the impact of that change. And if I were to come in here and clear out some of these trades, for example, I do run that risk if I'm editing too much to send any of my accounts to a negative cash position. So this is that putting you back in the driver's seat mechanism for you to kind of do your trades and then show you any impact of those changes. So that's the rebalancing kind of review process. There's so much more to kind of dig into here, but the last step of the entire process is really to get these trades sent out for execution. So you can do it by just selecting the trades that you would like to make for the accounts, send these out for export, and then you have two options as far as executing your trades. You can either use our fix provider, which is SunGuard or FIS, to route your trades directly to your custodian for execution, or you can have the system generate the specific trade files to each of your custodians, or if you only have one, it'll basically give you the format. The trades will be in that format, and then you can just upload them through each custodian's kind of trading process, validate and execute your trades that way. If you're doing any block orders, the allocations will follow with those, which is really nice. And so you can also block orders together, get average cost on those, and then allocate them. So that's the entire process. Again, there's so many other things we can talk about here, but wanted to kind of keep it short and sweet and kind of open it up to any questions you guys might have. So.
Awesome. Thanks, Jansen. So everyone feel free to submit any questions. Again, there's a button down at the bottom for any questions that you have, or Jansen has his email up here as well if you want to just send them to him directly. We do have a couple, though, that have come through. So Jansen, the first one is just around how the integration with Bridge is set up and whether
Okay.
that's something that advisors have to do on a daily basis to connect the systems, or how that works.
Good question. So the way that the integration is set up is we have automated the API integration. So what that means is if you decide you'd like to use AdvisorPeak in conjunction with Bridge, Bridge will basically generate some API credentials that you would enter into AdvisorPeak. So you'll do that kind of the one time as an initial setup, and then you would schedule when you'd like that to update every day after that. So you set it up once, and then it will automatically bring that data in every day after that. So the systems will stay in sync on an automated basis, but there is obviously just that little bit of setup right out of the gate.
Great, thanks for explaining that.
Yeah.
Next question is, how long does the setup or the onboarding process take? And is there someone helping the advisor, supporting the advisor through that process?
Yeah, it's a great question, and I'm always surprised by this question because we take such a intimate approach to all of our clients that are using the system. So when you sign up for AdvisorPeak, obviously we will basically assign you guys a relationship manager, as well as there's an entire support team that you guys have access to. So as far as setup goes, you're looking at probably anywhere in the realm of 2 to 8 weeks, 2 to 6 weeks, as far as getting started, getting all your data flowing, getting trained up and onboarded, and really at the end of like 5, 6, 7 weeks, you'll really be off and flying in the system. You'll understand how to get around, how to get your trades done, how to modify things, change things, and keep things up to date. If ever you have questions, you can just call directly into our support line. A real person will answer that phone and basically help you. And if it's something that they need to remote in with you and help you with some of that, they'll do that. So we take a very hands-on approach to really the onboarding process, as well as really ongoing support. So we pride ourselves in being very support minded. It's really where we invest most of our dollars here at AdvisorPeak. So.
Great. That is all I'm seeing for questions so far.
Okay.
So again, if anyone else has questions, we'll be sending out an email after probably tomorrow with this playback so that you can watch this playback, and we'll have Jansen's contact information in there as well. Feel free to also send any questions directly to me, and I can loop in Jansen. I can loop you in as appropriate. Perfect. There.
Yeah, and just to kind of put it out there, we're not a sales pressure kind of a team here. If you just have questions or you want to shoot some ideas past us, let us know. Margaret could probably vouch for us. It's not really our style to pressure people into buying our software. We even offer month-to-month pricing on our software. And we're really willing to put our money where our mouth is. We want you guys to get into a system, be able to use it. We don't have that many people leave. And generally when they do, it's just because there was some big changes that was kind of uncontrollable at the firm. So we'd be happy to work with you guys, get you set up, let you get a taste of the software, see if it works great for you. If it doesn't, that's okay. If it does, awesome. We'd love to have you guys aboard. So again, I really appreciate everybody's time today. And Margaret, thank you so much for letting us be here.
Thanks, Jansen. We appreciate you showing everyone the platform today, and thank you everyone who joined today. We really appreciate everyone's time.
Perfect.
All right. Have a good rest of your day.